Pfizer making some headlines over the weekend after slashing full-year revenue guidance by 13% on Friday. The pharmaceutical giant said that dwindling demand for COVID-19 vaccines and treatments were responsible for the updated guidance. For more on this, we want to bring in Les Funtleyder, E Squared Capital Management's healthcare portfolio manager. He's here to weigh in on everything we're hearing. And Les, this was kind of the miracle vaccine that people were waiting for back in 2020. But I guess the answer is now that people aren't worried about this. There's a lot more natural immunity out there. And as a result, there's far less demand. What do you think in terms of what this means for the stock?
For the stock, I think the direction of travel is still either down or flattish. I guess this earnings cut was sort of telegraphed. I think we were all waiting for it. But I guess it's good that they've come out and finally admitted sort of the obvious. I would say it's actually great that we don't need as many treatments or vaccines as you alluded to, because there's less COVID around, as it appears.
But in terms of the bet that the company made on this, I mean, this is in our judgment, they probably should have taken that cash that they made at the last few years and made a different series of investments. They done some very large acquisitions, one of which was Biohaven, which we own. But I think that they would have been better served if they'd done some smaller acquisitions for pipeline rather than bigger acquisitions for revenue. We might still be here, but at least we'd be looking at some positive pipeline catalysts in the next year or two. That's why you think the direction of the stock will still be down from here, just in terms of what the hopes for the future are for the company?
Yeah, I'm not sure it's come off a lot, so I'm not sure it goes down much more, but down to flat. And I would also add, on the macro side, we're heading into election season, which has generally not been that great for major pharma just because of political noise. But yes, I think that they would be better served putting more money into R&D and then smaller pipeline acquisitions.
I mean, the year-to-date down 38%. How much of that is a reflection of this COVID vaccine shortfall, the less demand for it? How much of that is a reflection of what you just talked about, the political landscape and all the talk about Medicare being able to directly negotiate with all of these drug companies?
That's an excellent question. To proportion declines, I think it's been a little bit of both. Although I'd highlight it against, say, a Lilly, which actually, has their obesity drug, which we actually do own that one. So they've done very well despite the macro headwinds, which proves that, good pipeline overcomes the bad macro. But Pfizer, unfortunately, has a little bit of both.
What do you think of companies like a Moderna that is much more of a pure play, at least right now, in terms of the COVID vaccine? Although Moderna has been pretty vocal about how they are trying to use the vaccine technique to do all kinds of other things, including a cancer vaccine, so to speak.
Right. Well, they, again, proportionally are, and we don't own Moderna, but they're very exposed to COVID, the COVID franchise. So if they can make the turn and, develop new products, they should be okay. But we have to see more evidence for them. And like Pfizer, that hasn't happened just yet.
Outside of Lilly, any other stocks you like in the sector?
Well, we own United Health. We think they are beneficiary from, a lot of the positives that are coming from less utilization. And I'd argue that the medical device companies also have been overly punished due to concerns about declines in utilization due to the GLP-1s, the obesity drugs. It's going to take a while before the obesity drugs find their way to reducing procedures. So companies like Boston Scientific and Stryker are very well positioned, I think, going into next year, pending some macro headwinds from politics.